Hey guys, it's Shauna the Tax Goddess. I always bring it to you guys when I know. So last night, apparently basically at midnight, the president signed into effect a mammoth piece of tax legislation. Now, you guys have been hearing, of course, the Senate and Congress had signed this earlier in the week as of Monday, and the president himself just signed this last night. So this is the new COVID-19 economic relief bill. And this is a massive, massive funding package that was, as I said, just signed last night by the president. So I wanted to go over some of the highly important topics that have been signed into effect under this set of law. I'm going to be covering a lot of topics here, guys, a ton of topics. So I'm going to do my best, and my team and I are going to do our best to answer your questions and comments. But of course, as new things pop up, as new things show up due to this law, we will be filming more and more video just for you guys. So definitely, of course, if you're on YouTube, subscribe to make sure that you're staying up to date. If you're not in our Facebook group, it's Tax Strategies That Save Entrepreneurs Thousands, and that is on Facebook. Or, of course, you can always find us at our website, taxgoddess.com. So let's start with some of the easy and basic stuff. Direct payments to the citizens. There will be, at the moment, now, according to what he signed, what Trump signed last night, there will be $600 paid directly to individuals that are making $75,000 or less per year, $1,200 for a couple making less than $150,000 a year, and an extra $600 per dependent for children under 17. Now, there's a lot of arguments still going on about this. This is what the president was originally saying. $600 is not enough. I want $2,000 per person, per dependent, all the way across. The president effectively got pushed into signing this bill the way it is, but $600 is still better than zero. And he has basically requested that Congress and Senate are still looking at bumping this maybe to $1,200, maybe to $2,000. But at the moment, it is signed into law at $600 per person. Now, the payments are going to be based on your 2019 tax returns. So again, whether you're at $75,000 or less, there are some reductions if you're over $75,000. So basically anything over $87,000, you're not going to receive a payment at all. So there's kind of like a phase out between $75,000 and $87,000. So again, $600 per person, including children under the age of 17. Now, as far as tax provisions, and of course, you know that is my primary world that I live in, is the tax provisions. One of the main one is there's still an ongoing payroll tax deferral. So if you are a business and you are struggling with cash flow, you do not have to submit the payroll taxes. Originally, that was through April 30th of 2021. That has now been pushed to December 31st of 2021. I want to caution you guys on this. If you have not seen my other video on this, I would recommend that you watch that video. Effectively, guys, this is taking out like a payroll tax loan from the government. And this is one of the few areas that the government gets really, really cranky about, is if you withhold payroll taxes and you don't get those paid. So very, very, very important. If you do this, I highly recommend that you set up a separate bank account, label it the IRS, which of course spells theirs, and put that payroll tax money in that account. All right. You do have the ability to use the money now. That's why they're giving you this payroll tax deferral extension. But I would be very, very cautious about this one, because it must be paid. No ifs, ands, buts. Unless they do another extension, must be paid by December 31st of 2020. Now, there are some paid leave credits, all right? So make sure that you're speaking with your payroll companies, especially about the paid leave credits and some of these payroll tax deferrals. They are going to be able to help you get these calculations and do them properly, and make sure that you are following all, crossing the T's and dotting the I's, specifically with relation to these payroll taxes. Now, what a lot of people have been asking about is the extension of the unemployment benefits. Now, originally what had happened, so basically we had unemployment, regular unemployment at the state level. They then provided a federal level of unemployment above and beyond that. That ran out, right? There were only so many weeks of that type of unemployment that were allowed. They have effectively added another 120 billion, 120 billion in unemployment insurance. And that is going to extend an additional $300 per week for anyone receiving unemployment benefits. This extra 300 is at the federal level. That will extend through March 14th of 2021. So a significant extension to those payments. Now, there's a ton of detail on the unemployment side. Have you been part-time working, full-time working? Are there interest-free loans? What's going on? So there's a lot of details in this. So if you have questions about the unemployment benefits section, I'm actually going to be posting in the comments to this video, I'm going to be posting a link to a really good overview, basic overview with bullet points of the COVID-19 economic relief bill. So if you're really focused on the unemployment, I would suggest that you read through that unemployment section. It's in the expanded unemployment benefits section. So moving on, the baseline is if you're on unemployment, you're going to get an extra $300 per week for unemployment. Now, other labor provisions. All right, so these are other things related to employment. So the FMLA, right? You've got coverage under Family Medical Leave Act. CARES Act, which was the original act back in March, had expanded that. They added an additional new law. Everybody loves their acronyms, the FFCRA, which stands for Family First Coronavirus Response Act. This was giving a refundable tax credit for paid sick leave for companies that had 500 employees or less, okay? Of course, that was going to run out as well. This has now been extended through March 31st of 2021. The bill does not extend the provisions that require public sector employees, state and local government entities to provide emergency paid sick and family leave. Okay, so it's a little bit different for private companies versus for government companies, so public versus private. Of course, this is also going to expand some credits that are available for the employers. So we are increasing the credit rate from 50 to 70% of qualified wages. There's tons of additional formulas in here, but basically what you need to know is that if you are an employer and you were able to hold on to your employees, there are significant tax credits that you can obtain. Now, one of the biggest problems in the original ruling, the original PPP loans that had come out, basically under the original legislation, it had said that if you took a PPP loan, period, plain simple, you were not eligible in any way for the credits, okay? As a part of this package, there's a section, the 206 section, which actually says, no, we kind of wrote it wrong the first time. You cannot apply for both the PPP and the credits on the same wage dollars, okay? But let's say, for example, you had $100,000 in wages, you only got $40,000 in PPP money, right? PPP loans. That other $60,000, you can apply for the credits. So that's going to be huge. Again, you're going to want to be working with your payroll company to have them help you, your payroll company, your CPA, and of course your tax strategist, to create the calculations for you to determine how much should fall under what category. What is PPP, what is credits, and what can you get a refund for under these new laws. All right, so let's keep moving. One of the biggest ones, the PPP, the Paycheck Protection Program. This was a huge, big, bad boo-boo in when they wrote the original law. Back in March, when they wrote the original CARES Act, they had said that if you take out a PPP loan, right, to pay expenses with that PPP loan, any of the expenses paid with that money are not deductible, which effectively makes the PPP loan taxable. Okay. Now that was biting a lot of people. They did not understand that it was going to be taxable. Guess what, guys? This fixed it, which we are very, very excited about. So now businesses that received PPP loans would positive, yes, you can take tax deductions for the expenses that were covered by forgiven loans. This is huge. So your expense lines are going to be the true expenses, what you actually paid using the PPP money. This is huge for a lot of businesses. Now, they are adding an additional $325 billion in small business funds, $284.5 billion for the first and second forgivable paycheck protection loans programs. And if you basically at this point, if you're a small business, so employees 300 or less, and you can demonstrate a revenue reduction, so a decrease in your revenue by 25% or more, you now can obtain an additional round of PPP funding. Okay, so of course it's yet to be seen. This was literally just signed into law again last night, December 27, 2020. So remains to be seen. It took the banks about 2 months to figure out the first round. We'll have to see how fast they can move on the second round. So what I would do here is take a look at your set of books. Take a look with your bookkeeper, with your CPA, have my revenues reduced. Now, this is a revenue reduction, which to me sounds like gross revenue reduction. They're not saying profit, they're saying revenue reduction. That's your top line revenue. So take a look with your bookkeeper, take a look with your CPA, whether or not your top line revenue has reduced by 25% or more to see if you may qualify for the new round, the round 3 of the PPP loans. Now there's a bunch of other money that is in this money, the $325 billion that they're sending out. But again, if you want more details, if you want to dive into the bullet points, I will be posting the link to a really great overview article down in the comments below. So let's keep looking at some of these other items that are here to benefit you. So we have a lot of health and human service type provisions that are being added, additional support and physician fees to doctors, other items, temporary freeze on aging out of foster youth. You know, there's a lot of kind of more generic health and human service type issues here. But again, if you are in any of those categories, if you're interested in that type of information, maternal, infant, early childhood programs, that kind of thing, Center for Disease Control Issues, those types of things, again, we will be posting the link with the details down below. Here, I really want to focus on the business provisions specifically. Now, a couple of really neat random kind of things. The government, Trump he's pushing to have meals expenses. Meals has always been 50%, right? Meals have always been at a 50% tax deduction. He is pushing to have meals at a 100% tax deduction in an attempt to help raise the spending at restaurants. So side note, I thought that was pretty cool. So definitely take a look at your meals and entertainment budget for the year and see whether or not, this one we're still waiting to see, but let's see whether or not he raises that to a 100% tax deduction. So really, guys, what this tells me and what I think you should really, really be looking at here, sorry about that. Apparently they're as excited as I am about this new law. What I think you guys should really, really be looking at here is do not file your tax returns on time this year. Okay. Now, normally you'll never hear a CPA say that. I want you to be filing a tax extension. Okay. So for businesses, for partnerships and S Corps, that is March 15th is the deadline. You're going to file an extension. So you have until September 15th to file. And then of course, for individuals and for C corporations, that deadline is April 15th. So 6 months would put it to October 15th. Now, the reason why I'm saying I want you guys to file extensions, you saw how long it took the government to get themselves organized when COVID hit the first time. They were pushing tax deadlines already by 3 months, 4 months, okay? I would prefer that you guys have as much time as humanly possible to figure out what the tax law changes are, what they're going to do to your set of books, which is what it's going to do to your tax return, which is what it's going to do to your cash flow. Okay. Now, just because you file an extension, that's an extension of time to file, not an extension of time to pay. So I absolutely recommend that you call your CPA, call your tax strategist, get an appointment with us as quickly as humanly possible, because realize any other business owner is also going to be in the same mode here. What's going on? What questions? What do we need to be doing? These kinds of things are going to come up over and over and over again. All right. So I want to hit a couple of other little things here. There is now a specific brand new section if you are in a disaster zone. Okay. Areas where individuals and public assistance is mandated. So disaster zones, typically this is going to be your hurricanes, these kinds of major significant disasters. There is an additional 40% tax credit for wages up to $6,000 per employee in a disaster zone. All right. So again, guys, the major pieces of what is coming out of this law for my business owners: $600 per week relief check, additional check, just an additional check for each person, okay? And for children under the age of 17, you also have $300 a week in unemployment benefits. And of course, the biggest one, besides, the additional new round of PPP funding, is the ability to take the expenses that you paid from the PPP loan as an actual expense against your profit. Now, one last thing I want to say, I want you guys to be looking at your profit and loss right now. Today is December 28th, okay? One of this very little sneaky loophole, you guys know I'm all about legal loopholes, okay? One of the loopholes that they put in the original CARES Act, the one that was written back in March, was that if you have what's called a net operating loss, an NOL, in the year of 18, 19, and or 2020, those losses, all three of those years, or just 1 year, whatever it is, those losses can be carried backwards up to 5 years. So if 2020, COVID hit, your business tanked, you now have a massive loss, you took out PPP funds, you're going to have even more expenses. The likelihood that you're going to have a pretty big NOL is pretty high. You can carry that loss backwards, 2020 up to 5 years, 19, 18, 17, 16, 15. If in 2015 or any of those years in between, you were making significant income with significant tax rates, you can probably get a chunk of cash back from the government based on a 2020 NOL. Okay, so there are lots of ways to use that NOL strategically. Of course, you guys know this is what I do as my passion is tax strategy. So if you guys have any questions on that, feel free to send us a text message. I'm actually going to tell you to send us a text message. Our main line, 602-357, right here. How do I do this? Right here, 602-357-3275 if you want to call us, but I would recommend a text message. I will be checking text messages as much as I can between now and the end of the year. So in the meantime, I hope everybody has a wonderful new year. And, of course, if you guys have any questions, don't hesitate to ask. And if there's any additional new news that comes out, I will be the first to let you know. All right. Thanks so much, everybody. Have a wonderful day. And I look forward to talking to y'all later. Bye.